Hello and welcome to lecture number 4. Now we will start with the part of sustainability accounting. We are moving a little bit away from reporting. Now we will focus on accounting part. And that's where we will start with a few discussion on key concepts that you need to understand for sustainability accounting. And the first thing is to understand the different types of accounting that exist. So first, we have maybe the one that most of the population uses, tax accounting, which is the accounting that you need to pay taxes. This is based on law, so you need to follow whatever law says. If you want to know what is an expense or what is income, how to calculate things, you need to read the law on taxes. So that's mandatory, and that is for everyone who pays taxes and all organizations. Then we have financial accounting, which is a different type of accounting that is used mostly by companies, usually public companies, companies that are in the stock market, companies where you can invest buying shares, very easy to buy, and or also if you want to gain access to financing from very formal institutions like big banks and this kind of things, and you are a firm and you require like a big amount of investment, they will ask for your accounting based on financial accounting terms. And the financial accounting is based on books from the different financial standards. In the US is the US GAAP, in Europe is the IFRS. So it is a different type of accounting. There are different rules. Maybe just to mention some very easy to differentiate things is that in tax accounting, income is registered when you issue the invoice. So as soon as you issue the invoice, you have to report the income to the tax office. But in financial accounting, no, you have to, if you issue the invoice, you need to wait until it gets paid. That's when it becomes income. And this is because in tax accounting, the government wants you to pay more taxes. So they will say, everything is income and they will be very picky with expenses. And in financial accounting is the opposite. The idea of financial accounting is that you are more conservative, like you don't inflate your profit, like you don't put a lot of income. So it's the other way around. Like you need to be more careful when registering income, and you need to be very open when registering expenses. It's totally the opposite kind of philosophy. In tax accounting, you want to have less profit because you don't want to pay taxes, and in financial accounting, you want to do the opposite. You want to show a lot of profit. So the two types of accounting, but we are not going to touch those two. We are going to focus on management accounting, the third type of accounting. And management accounting focuses more on generating information that is relevant for people inside of the organization. Usually, management accounting is a secret. Like you don't want uh, competitors to know internal information like your costs, like your investment in in equipment and these kind of things. You want to keep things very secretive. It's because it's for you. And then the other thing is that there are no big rules or hard rules that management accounting is based on. There are books that suggest how to calculate things. We will learn a little bit about that. But since you are not going to report to anyone except for yourself or their own company, you don't have to follow any rules like that blindly. Like in tax, you need to obey the law. Here you can make adjustments. So it's a little bit more flexible. Uh, so we will focus on management accounting for what we are going to see in this module, but it's important that you understand the differences because we are going to do some calculations, but these calculations will be different for taxes or for financial accounting. That's a different topic, a different subject. We are going to do calculations that are relevant for us inside the organization, information that matters to us, and with that we can decide on things, connect strategy, improve strategy. We will develop this later on. And the second aspect that we need to discuss is environmental impact because we will uh, we will learn about how to account for different things in terms of money, like the traditional way to do accounting with money. But there is also in sustainability a need to account for environmental impact, and environmental impact is not all the time measured in money. Environmental impact can be measured in kilograms of CO2, kilograms of methane, kilograms of different types of impact or uses of different chemicals. There are different approaches to this. However, Some important features or characteristics about environmental impact in accounting is that it is measurable, it is kind of objective. It is important because we need to understand uh, how much it costs, the impact that we are improving. So we need to understand the cost side. We are going to discuss that in some exercises, but we also need to understand and know how much we are doing better, and then we will see if we'll try to balance if it's worth it or if we can improve that. So these two concepts, different types of accounting, will focus on management accounting, and that environmental impact is a way of doing accounting in sustainability that is not only about money, but it is measurable, it is objective, it is used to understand how well we are doing, and we can reflect based on cost. So we will start in the next video with the with some applications of these concepts.